And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld here to take you through to the closing bell with a global simulcast. We're joined now by Massar and Tim Stenovec in the radio room. Welcome to our audiences across all of our Bloomberg platforms as we parse the most crucial moments going on in the world of finance. But we do want to start off the simulcast here with a note here about the world of politics. We're now learning, based on a headline crossing the Bloomberg terminal, that some of the Epstein files have been posted on the Justice Department's website. Here is what we know right now. The president, of course, last month signed a law, a bipartisan law, requiring the release of files related to financier and convicted sex offender Jeffrey Epstein. We are talking thousands, hundreds of thousands of files. This is a significant amount of data, so we are having our team parse through all of this as we speak. And as soon as we get details, and more importantly, a deeper understanding of what's in this report and the implications, we will bring it to you and break it down for you live on air. But right now, some of those files now being posted to the U.S. Justice Department's website. Carol?
All right, good to know, Romaine, and obviously we'll continue to monitor that. In the meantime, we've been monitoring the last Friday full trading week of 2025. There's more trading to go, of course, but we are seeing a rally underway. Right now, we're looking at stocks kind of hovering near their best levels of the session still, up 0.8%, almost 0.9% on the S&P 500, 68.34. NASDAQ 100, a gain of more than 320 points. Tim, up 1.3%.
We get the closing bells here in New York on this Friday afternoon. And it has been quite a week here. I do want to start with the S&P 500 because it's up right now, roughly about 58, 59 points as we wait for these numbers to settle. That's going to be about a 0.9% gain on the day, 68.34 and change. Looks like where it's going to settle. And if it holds that means that we'll have effectively erased all of the losses from the first 3 days of the week, providing a weekly gain for the S&P. Only up about 0.1%. But that is a big turnaround from where we were earlier in the week. The Dow Jones Industrial Average adding about 182 points on the day, or 0.4%. It's still going to finish the week in the red. The NASDAQ, though, inching into the green on the day and on the week, a 1.3% gain for the day. Similar gain for the NASDAQ 100. And the Russell 2000 on the day, adding about 22 points, or about 0.9%.
All right, and going back to the S&P 500, if I may, 284 names to the upside, 217 to the downside. Despite that overall index move, you are seeing, Katie, kind of a split in the winners and losers here.
Let's take a look at the sector breakdown as well. Certainly informative today. You can see visually represented a lot more green than red. That's because a lot of the biggest sectors outperformed today as measured by tech. That sector higher by more than 2%. A big rally underway in shares of NVIDIA today, but also financials, industrials, healthcare getting in on the action as well. So some breath there. In terms of what didn't perform on this Friday, on this final trading day of 2025, consumer discretionary.
Final trading day of 2025?
Of the last week of 2025.
Oh, okay. You had me scared there.
No,
Yeah.
don't worry.
Right.
We still have plenty of time left together. Anyway, utilities off by 1.3%. Consumer staples down about 0.5%, Carol. Real estate also getting hit today.
I gotcha. All right, let's get to some of the individual gainers, if we may. Carnival, this was definitely an outperformer. Number one gainer in the S&P 500, folks. Just finishing off its highs of the session. Still good enough for a gain of about 9.8%. The company giving a better than expected profit outlook for next year, reinstated dividend payments. The company expects adjusted net income to rise about 12% next year. That's higher than the average analyst estimate of an 8.7% increase. So that's quite some outperformance there. As we mentioned, they also announced that quarterly dividend, 15 cents a share after payouts were discontinued back in 2020. Company also said trends are poised to continue to next year on higher prices and bookings. So that lifting the cruise group on this Friday. Got to go over to Oracle, which has had a little bit of a tough go as it questions some of its moves and investments into AI and the debt that it's been taking on as a result. Actually getting a kick to the upside, up 6.9% in today's session. This happening on a Bloomberg exclusive, TikTok being bought by a group of buyers led by Oracle, which will own 15% of the entity, as will Silver Lake and MGX. That's an Abu Dhabi-based investment company. Oracle and ByteDance signing binding agreements to create a U.S. joint ventures. And so it will be an independent entity controlling data protection, content moderation, and algorithm security with a new 7-member majority American American board of directors. So that was some interesting performance there for Oracle. And this one, for something different, I like to kind of go there. A small market cap, about $617 million. Ticker is WYFI, White Fiber. It was spun out this year from its parent company, Bit Digital, which is a crypto firm, which spun it off to focus on AI infrastructure. White Fiber provides AI data centers with what's known as biological white fibers for quick power and fast computing needed by AI and machine learning tasks. And what happened is some news today, it announced a 10-year, 40-megawatt co-location agreement between its subsidiary Enovum Data Centers and Nscale Global Holdings. There's a lot of stuff in here, but basically a new megawatt data center. What's interesting is it takes kind of existing facilities and makes it ready for high-performance data center compute, if you will, that's needed for AI, machine learning, and all that good stuff. So I just like to throw that out. It's a stock that is down about 5%, though, since its IPO back in August.
Okay, that one, I have a less complicated one, Carol.
Sorry.
I'm going to start with that.
Bring it on, Tim.
Everybody knows what Nike does. Down
educate.
10.5% today. This after the company warned that sales will decline this quarter. Persistent weakness in China. And then the Converse brand also seeing weakness, too. The company does expect revenue to be down in the low single digits in the 3 months that started on December 1st, with Converse sales plunging and Greater China sales down. Nike shares today down by 10.54%, kind of where they were throughout the session. Also, Lamb Weston. Oh,
wow, what
frozen
happened?
potato French fries. Frozen potatoes
as
French
opposed
fries.
to
Look at this.
non-potato French fries?
You could have some
You can have sweet potato
French
fries. Yes, very
Yeah.
valid point.
You know.
Those aren't real fries, but thank you. All right.
Okay. Down
It's the
26%
hill I'm willing
today.
to die on.
This is now trading at the lowest going back to March of 2020. The company came out and maintained their full year guidance despite beating second quarter expectations. The company noted, though, in their press release that the price mix declined 8% in North America due to ongoing support of customers through price and trade. So essentially a profit warning about discounting and rising manufacturing costs. And finally, looking at home builders, specifically KB Homes today, this after a week where Lennar reported results that disappointed markets too. KB Home shares fell down 8.5%, at one point down the most intraday since 2020. This after the company posted fiscal fourth quarter profit that missed analyst estimates. The midpoint of the outlook range for fiscal 2026 housing revenue also lagged expectations. KB Home down 8.5%.
Let's take a quick check in yields. The entire curve shifting higher on the day, but we should point out pretty much every key point along that curve is lower on the week, including your 2-year yield, which is higher on the day, but is now dropped for 2 straight weeks as a lot of people continue to bet on continued Fed rate cuts into 2026.
Yeah, and that's going to be our big thing. You know, what's interesting is we've been talking a lot here, Tim and I, and I'm sure you guys have too, about some of the inflows that we've seen into U.S.-based assets and U.S. stocks in particular. We ended last year wondering whether U.S. exceptionalists would continue exceptionalism. It did in the beginning of the year. That changed then with Liberation Day and the tariffs by President Trump, but we've seen investors coming back into the U.S. market in a big way, and I think that's interesting. Does it hold in 2026? Who knows?
But as we spoke about with Eric Weiner a little earlier in our program, the U.S. performance kind of pales in comparison to some of the performance that we've seen elsewhere in the world. Europe as a whole outperforming some countries there. Lithuania, Tunisia, Jordan, Slovenia up 50%. Venezuela's stock market up more than 1,200% this year. We're not at the end of the year yet, but we're seeing where the U.S. fell in this year's trade.
It is really fascinating to take stock of some of those stats, because I remember having this conversation in January, February, that fledgling outperformance you were seeing from the rest of the world. A lot of folks said it was basically a false dawn, that we've been in this movie before and it tends to be fleeting, but I don't know.
Yeah.
Performance is proof, and it's been a solid year of this. So it is going to be interesting to see whether that momentum does continue next year, and what is the catalyst.
Well, it's also interesting, too. I mean, you really talk about that outperformance without talking about the massive drop that we saw in the dollar this year, at least if you measured by the Bloomberg Dollar Spot Index down, I think we're at about 8% or so, which is kind of the worst year, at least since 2017. And it's a complete flip-flop from what we saw last year when we saw the dollar actually appreciate by about 8% relative, at least to its biggest peers. So that's going to be a big factor, Carol and Tim, as to whether that continues.
All right, so I'm looking, let's see, the next Fed meeting in 2026 is January 28th. And then
Are we going to be close to a
Morgan,
government shutdown by then? That's the question, too.
Wow.
and then you
Good
got
question.
JP Morgan earnings on January 13th. So I just feel like Are those our next focal points?
Oh, okay. You're going deep there. Okay. All right. Christmas is next week, by the way. Merry Christmas.
Always thinking about what's
Christmas.
coming. All right. Merry Christmas, everybody.